SoFi Q3 earnings are right around the corner, November 1st to be exact. But with that being said, I want to give you the most amount of information possible, that way we can make accurate predictions about what we're going to expect come November 1st. But to get accurate predictions, it's actually quite hard. We had to go to multiple different sources to try to find which ones were actually very accurate. The first one I went to, which seems to be very popular in this space, is website traffic for SoFi. Here you can see all the desktop traffic, and this is in the millions, and also mobile traffic, all in the millions of what we're seeing every single month for SoFi website traffic. But the numbers that I want you guys to focus on are these specific numbers that are actually each individual quarter. Now I've been able to extract that and put it on its own site. That way we can actually just see it all on one neat sheet here. And that's every single quarter with all the desktop traffic, the mobile traffic, and then the total. But the number that I want to focus on here is the total, where you can see the amount of quarter over quarter growth that we're seeing in the total amount of website traffic. 38%, 52%, 12%, but then in the last quarter, the quarter coming up, negative 38%. Now this in itself is a weird piece of statistics because we don't know how truthful or accurate that it actually is. Now this can seem very concerning, and it might be, but whenever we actually dive deeper into the TipRanks website data, it seems to be like we've spotted some sort of bug. How could it be that in September, the most recent quarter that we actually have data for, website traffic came in on the desktop side as being at the highest it's ever been recorded for SoFi, but yet on the mobile side, we saw the lowest it's ever been recorded and a 92% drop month over month. I'll let you decide for yourself what you believe on that data, but going back to the numbers that we have here, whenever we actually do compare these, whether we look at the total percentages versus the actual member percentages, that's an insanely close comparative. And same here with Q2 of 2022, 12% to 10%. But then there's this weird standout quarter in Q1 where we see 52% of the, total growth, but yet what we actually see on member growth is down 22%. So until we have more data, I don't know how much we can actually trust it, considering that over here, that's a 74% difference on the percentages that we're looking for. So how accurate can this data be if one single point in the data is so completely off? But if we were to predict member growth purely off of website traffic, that would show us that we would see around 280,000 new members, one of the worst member growths that SoFi has seen since we've been public. But this is not the only indicator that is very popular. Another very popular indicator is also app downloads. Now for app downloads, we commonly use two different websites to find this data, either Sensor Tower or App Annie. But now for this particular exercise, we use Sensor Tower for this data, where we saw in Q4 2021, the first time we did this, 650,000 downloads were expected by Sensor Tower, but what actually happened was 523,000 was how much we actually reported for that quarter, which means that we only achieved 80.46% of what Sensor Tower said that we were actually going to have for download. But Q1 and Q2 of 2022, we saw the complete opposite, where instead we saw 380 and 370,000 downloads, but the percentages came in very, very different, actually on the upside of 107 and 110% respectively. These were massive, really great upsides that estimates just couldn't predict, because obviously all the estimates were way below their target, which means SoFi had great quarters. So going off of these numbers, that means we could see anywhere along the lines of 330,000 new members to 510,000 on the high side. And I always think it's funny that analysts sometimes will project our earnings based on the low side of our guidance, as if that ever happens to SoFi. In the 7 earnings reports that SoFi has had since they've been a public company, 6 of those reports have been above and beyond expectations, with only one of those quarters coming in at exactly expectation and also on the higher end of their guidance. So sorry when I say that, I just don't see a miss here in our future, considering whenever we also look at the competitors. It's banking earnings season now, which means we've had access to a bunch of different banks' earnings reports before SoFi has actually reported on theirs, and so far it has been an absolute blast. I have taken a look at every single large financial institution that has a banking sector that's in the personal consumer side, and every single one, from Citigroup to Bank of America to JP Morgan to Wells Fargo, says all the same thing. Bank deposits are at massive increases quarter over quarter. Credit and debit spending are at very large increases, which is not only good for SoFi, but also great for Galileo and Technesis. But obviously, the most amazing part of all, they have all seen their average loan balances go up, and the amount of loans that they're actually signing has gone up dramatically as well. But talking more specifically, home loans have seen a little bump, as well as auto loans, but personal loans have seen a massive spike across the board. That also happens to be SoFi's largest business sector, as well as their most profitable in the entire company. And with that, across the board for bank competitors, net interest income has also spiked this quarter because of the amount of loans that they're actually bringing in. And lastly, just a side note as well, digital sales have also increased across the board for all of these banks, which, could seem like a bad thing, but whenever you actually compare it to what SoFi has to offer, what we really want to see is that people are just willing to try out a digital sales product. Once we actually compete with Wells Fargo or Bank of America product to product, and people are willing to use a mobile only service, they're obviously going to pick us because our interest rates are much higher and our ease of use product products are just better. So once we actually know that these people are willing to try those products, it's actually a better consumer for us to go after. But before I give you guys my exact predictions, what I want you guys to do is go down below and make sure you guys hit the like button and subscribe down below if you want to see more financial content just like this. But now first, let's already understand that SoFi has already raised their financial guidance in the last quarter, meaning that because they had already seen a couple months that things have been improving, that they were able to actually increase their guidances as well. This is already a great sign that Q3 has been going swimmingly. Now, the exact guidance that SoFi has put out is around $331 million for their Q3 revenue guide, as well as $31 million in EBITDA. Now, it would be so hard for me to give you guys a numerical value. However, I obviously think that both EBITDA and revenue is going to be beat this quarter, as well as I'm going to go into every single product to show you guys which ones I think are going to outperform and the ones that are going to falter. Okay, so lightning round. Our most popular product, SoFi Invest, I actually think is going to have a big slowdown this quarter, considering with how hard the actual stock market has been hit. Now, although it might be the best time to invest, the average consumer doesn't think this way. When the stock market is down, it's not performing as it should. People don't actually like to buy the bottom. SoFi Money, on the other hand, I think will do absolutely exceptional, considering the offering that we're giving of 2.5% interest rates on their checking account. Considering the high returns that it's offering in an environment where it's so hard to find any positive return at all, I think it'll be a big product and a lot of people using this. This will also translate into deposits doing very exceptional as well, and that's shown by other banks already reporting, saying that that's absolutely key for what they're seeing. Personal loans, just like what we're seeing at the banks, is going to be a massive growth point for SoFi this quarter, and the industry is showing that across the board, and I don't think SoFi will be an exception. Home loans, not too excited in this space as the real estate market is starting to cool. However, our competitors are showing that there still might be some growth in that loaning sector. However, I don't think that's going to be the case for SoFi because we haven't seen it in previous quarters. Student loans, I believe this is going to be a very good product for us going forward and a marginal increase this specific quarter. Now that people actually understand that the moratorium is coming to a hard cut, people are going to want to sign up before December 31st and get their rates secured before they continue to rise. This also shows through as SoFi has been advertising their student loans extremely hard in recent months. Credit cards, if we were to believe what the other banks are showing us, I believe that this is going to be a massive product for us. However, last quarter, that didn't seem to be the case. Last quarter, it was the largest quarter that we'd ever seen for credit card growth in the industry. However, SoFi, it wasn't even one of its larger months. Now for Galileo, if you believe what the banks are saying, that the credit and debit spend has been increasing, then Galileo is going to have an amazing time. I believe that the transactions have increased, and that way, revenue for Galileo is going to be sky high, but the amount of accounts might just be in this small, 35% ranges in that area. SoFi at Work is a hard one for me to put my finger on. I've tried to make predictions in the past and going over different models that I thought would actually work. However, whenever I actually get the actual results back, they never seem to fit. I'd like to think I'm right in my assumption that if we're going into a recession, layoffs are still happening and spending is slowing at different corporations, that selling a benefits type package to these corporations is going to be a very hard sell. However, even in past quarters when this was still the issue, that hasn't slowed down SoFi at all, and we're continuing to hit newer, higher highs. But I guess we're just going to have to wait for November 1st to see what Galileo actually posts for the exact numbers. Unless, of course, if they leak it early, which they have in previous quarters as well. I mean, who knows? Well, let's just wait and see. But if you haven't seen what Galileo has been working on, make sure you guys go check out that video over there. Make sure you guys like this video and subscribe down below if you want to see more financial content just like this. Bye for now.